in terms of returns in crypto, I think because of the tokenization of a lot of these projects, you have very high returns on practically anything, which is not very VC style model, right? VCs are like, well, 90% is going to be completely dead and 10% might outperform or even less than that.
Hmm.
With crypto, because we've tokenized so many projects early on, and you have the beta of the bull market just dragging that, your entire return curve kind of just explodes.
Hmm.
Do you think that's, I mean, I don't want to sound like a traditional finance person, but like, is that sustainable? Do you think there's a case to be made that we are benefiting from the bull market systemically, just because we list on, tokens list on decentralized exchanges that makes them more likely to just outperform, even if they're not so successful, or we're going to mature to the point where only a few projects actually go up in price?
It's a good question. I think the answer is probably both. So the early liquidity is a feature, not a bug in this case. So I actually had this conversation many times with some of my friends who are concerned about the price volatility of Ethereum, right? And most people in DeFi, hold Ethereum, and that's what kind of gave them some financial success. And they're always, is the bear market coming? Is the bull market coming? But then if you flip the question, and so Ethereum has been around for 6, 7 years, right? Well, 6 years basically. So if you have something which has been around for 6 years, the metrics and the fundamental growth is that insane. Is it a Series C, Series D kind of company? If it was a venture project, so then those who bought it 5, 6 years ago, they came in at C, the Series A. Now their project is a Series D. It has grown 1,000x, if not a million x. I don't even remember the numbers, and it keeps growing. So I looked at the Ethereum network revenue year on year, and it was up 500%.
Right.
So you're sitting on an asset that is growing at that pace, and I come to you and say, can you sell your Series D investment to me? You will probably tell me no. So I think this liquidity creates a lot of noise and changes things, but basically things do get liquid very early. So if you're a venture fund and you have a portfolio of Series A, Series B companies and they're stagnating, the odds are you can't really sell much. Maybe some of them will get equi-hired and you'll make 20, 30 cents on the dollar, but that doesn't really work. But in crypto, these tokens are liquid. And obviously in the bull market, it's easier to get out, but you can get out to a certain extent. And if you can't, they can be productive assets, right? You can stake them, you can lend them, you can do something else with them. So I think it changes the dynamics, and obviously it will get tougher in the bear market, but I don't think this feature will go away.
Actually, there is an interesting point to be made because of this liquidity. Effectively, you can put more risk, more capital at risk, because now your floor is not zero.
Exactly.
Now your floor is minus 30 or 40, 50%, which is, which basically means you could put more value at risk. So liquidity is actually creating more risk taking, you could argue, which is not like I'm not discovering America really, but but I still think it's quite a significant feature that crypto enables that wasn't there before.
You're absolutely right. So if, for example, you want to lend to a venture-backed company, so there are great funds doing venture debt products. It's a liquid product that can hopefully perform very well, but you're stuck with it for 7 years. In DeFi, liquidity is, unless you choose to lock it up, is instantaneous. So we, for example, we choose to run a monthly liquidity cycle for our funds. So investors can come in and out once a month. It could be done even more frequently. It's just very painful from the administration perspective. But this is extremely liquid and not too different from keeping your assets on a deposit. So by the virtue of being liquid, it allows you to deploy more capital because you can get it out, which you're right, change the dynamics. And this disposable capital opens up opportunities for more teams, more projects, and creates this positive virtual cycle.